I'm Gilles Hudelo, Director of Education here at Fruition, and I am the lead mentor for Fruition when we do one-on-one meetings with members.
Hi, everyone. I'm Maddie, and I am the Director of Growth here at Fruition.
So the One Big Beautiful Bill Act, OBBA, was signed into law July 4th, and Gilles is here to help us break down some of the new provisions in that bill. And we're going to start this week with the no tax on overtime provision. So what does that mean? Who does this apply to, Gilles?
Thanks, Maddie. No tax on overtime applies to non-exempt W-2 hourly employees, and the overtime has to meet the Federal Labor Standards Act, so FLSA overtime. So this usually means the overtime that's like the hour and 1.5 times your regular pay if you've worked more than 40 hours during the week. So the deduction only applies to the premium portion of the overtime. So that extra half a 0.5 times that applies to the FLSA Act.
All right, so what does that actually look like? I make $20 an hour, and I've worked 50 hours this week. What does that mean for my taxes?
Yeah. So if you are an hourly employee that's non-exempt, you can deduct up to 12,500 of your qualifying overtime income if you're filing as a single person, or up to $25,000 if you're married filing jointly. Unfortunately, married filing separately doesn't get this benefit. So it's considered an above the line deduction, which means that it reduces your taxable earnings before you get to the decision to either take standard or itemized deduction. So this would be in the same area of your tax forms that where deducting your IRA contributions or your student loan interests would apply to. So let's use an example, right? So let's say you're making $20 an hour and you work 50 hours during the week. You get $20 an hour normally for your first 40 hours. So let's say that's $800 for the week for your regular pay. But then your pay bumps up to $30 an hour, time and a half, for the 10 hours of overtime you work. So you make $300 for those overtime hours. The $10 extra in overtime that you make for those 10 hours of overtime would be your qualified overtime income. So that $100 extra above your normal wage would be reduced. So let's say in a normal year, let's say you do these overtimes 50 weeks out of the year, assuming you're going to take a couple of weeks of vacation, then you would potentially reduce your earnings in that example up to $5,000 for the year. And if you're in the, let's say, 22% tax bracket, that means you could reduce your taxable, the amount of taxes that you owe by $1,100.
Sounds pretty good. And is this on all of my taxes?
No, it only applies to your federal income taxes, things like Social Security, Medicare, and any taxes that you owe on for state and local taxes are still going to apply normally, and your employer will continue the withholding as usual.
All right. And so if it got signed on July 4th, but when does it actually start?
Yeah, absolutely. The nice thing is that it's retroactive to the beginning of the year for 2025. So all of that qualifying overtime that you've made so far this year and anything you make between now and December 31st would apply. The Act also extends this benefit through the end of 2028. So it would sunset at the end of 2028 unless Congress decides to extend it. Yeah. So this benefit applies to, again, hourly employees with a Social Security number. So it wouldn't apply if you are a salaried exempt employee, if you're, let's say, an independent contractor or gig worker, and if you're a worker that doesn't have a Social Security number but might have an I-10, for example. There is also a phase out So if you make more than $150,000 for the year as a single filer, or $300,000 uh, if you're married filing joint, then the amount that you can deduct will slowly go down if you make more than that 150 as single, 300,000 as married filing joint.
So, what do I need to do as an employee outside of filing my own taxes?
Yeah, absolutely. So your employer is responsible for tracking and reporting your qualified overtime. They'll either report that on your W 2 or on a separate statement at the end of the year. So you would take that information and then you would report that on your you'd be responsible for filing your own tax return. And so putting that information in to your 1040 form next spring. So remember, you know, tax deductions and tax issues can sometimes get a little complicated. So it's always a good idea to consult a qualified tax professional to make sure that you're putting in all the information correctly and maximizing your tax deductions.
Can members ask tax questions to mentors like yourself?
They can. Keep in mind, we are an education service, so we can inform you. We may not be able to specifically give you tax or investment advice, but we can certainly share our knowledge of what the tax rules are to the extent that doesn't bleed into or go into a specific investment advice.
Awesome. Anything else that people should keep in mind with this new provision?
The IRS is still working out on the specific rules of kind of how the reporting is going to be done and how the tax form is going to be adjusted. So we may get some more information later on in the year, but it's pretty straightforward. So just make sure that you're keeping track of your qualifying overtime. Make sure that your information matches with what the employer is matching, and put it accurately into your tax return. Hopefully, you'll get a little bit of extra money during tax time next year when you do your final reporting.
Amazing. Thanks, Jill.
Great. Thanks, Maddie.